Well, hi guys, welcome to this Moneycontrol live stream. You're watching Stocks for the Next Innings with me, Nandita, Khemka. Well, this is a show where we focus in on stocks that should be a part of your portfolio with a 3 to 5 year perspective, in light of the return of the Modi government for its third innings. Of course, it is in no way a recommendation. We are not recommending stocks here. We are just highlighting the stocks that you could look at for the longer term. Of course, you need to, take the advice of your financial advisor before making any investment decisions. But today's show, we will be putting the spotlight on HUL from the FMCG space, Hindustan Unilever. Now, with the return of the coalition government, there are hopes that the government will prioritize rural development. And experts also believe that the budget may have a populist tinge to it. Now, volume recovery, especially in rural India, has been a pain point for FMCG firms. With the political landscape changing, has the outlook on the space improved? That's the call. That's the question that we'll be posing to our expert on the show, and what the call really is on sector leader HUL against this backdrop. Is it among the best defensive bets with a 3 to 5 year perspective? Let's touch base with our guest and find out. Joining me is Amit Purohit, who's the VP at Elara Capital. Amit, great to have you on the show. First and foremost, how has the outlook on the stock changed, especially post the 4th June election verdict? There was a rush to safety. On a day when the Nifty, fell 6%, we saw the stock of HUL rise 6% on the 4th of June. Since then, there has been some of the, there has been a rush towards defensives, but it may have slowed down a bit. In your view, how are you, looking at HUL now? I know that after the numbers, fourth quarter numbers, you had a reduced rating on the stock. Have you changed your views, especially in light of the changing political landscape?
Yeah, thanks, Nandita. So on HUL, we probably, like you rightly pointed out, the overall outlook on the FMCG is also to do with the rural recovery. And at this point of time, when we look at it, there are a couple of things which has to fall in place. One is the monsoon part, and second is the expectation that the budget would be a bit more populist, helping the improving the farm income. So these two will be the key drivers for the uptrend in the volume. So important to note here is that last year you saw a muted growth for HUL in terms of both revenue as well as the profit. And the improving outlook would be driven by one, rural recovery, which is very, very critical from an HUL perspective, given its wide product portfolio and its presence in the rural space. So the whole outlook would actually be around how the income levels in the farmers improve, and hence second half probably would see some improvement in this. So we are actually at this point of time probably looking for some early signs of recovery for us to probably change our outlook on that.
Okay, of course, as we know that commentary around rural demand was pretty upbeat, right? I mean, most of the managements, in fact, especially the likes of Dabur and Marico had hinted at, some bit of recovery kicking in. And now, there has been, the forecast of above normal monsoon for the year as well. But urban demand continues to remain resilient, right? So in that sense, would you call HUL among the best proxy plays, for the next 3 to 5 years?
So if you look at from an urban and the portfolio of HUL, probably 1/3 of its portfolio is largely low penetration, and about 2/3 is about pretty well penetrated categories. In terms of premiumization trends, which has been very strong, if you look at over the last 1 year or so, where overall growth has been muted, the premiumization trends have been very strong for HUL across categories, and that has kind of helped the company to, go through or look at or report a slightly better growth in the premium portfolio, and ride through the tough times in rural. So rural recovery remains, urban, like you indicated, is an important variable for the company to continue to drive growth, but the delta or the uptrend in the top line would be driven by the rural, because the volumes would come from the rural side. and roughly around one third of its portfolio is the premium portfolio, where the premiumization trends continue, and still almost 70% of the portfolio is still where the volumes growth needs to be driven. Hence, volume growth recovery is very, very critical from an HUL perspective. And like we said, that from a 3 to 4 year perspective, as the things improve, because last couple of 1 year has been if the things outlook improves in terms of the rural recovery, one has to be note here that the monsoon has been a deficit so far. So we'll have to wait till after July. There will be more clarity in terms of how monsoon plays out. And clearly, if all these things fall in place, and so broadly from a 3 to 5 year perspective, Unilever should benefit from this, and hence the outlook would improve for Unilever from growth and perspective.
Sure. Talking about the premium side of the portfolio, the BPC segment, beauty and personal care segment, continue to deliver strong double-digit growth trajectory, and you've seen innovations in new demand spaces and formats. Mass portfolio segment, of course, continues to underperform, and then there's competition from new age rivals and direct to consumer brands such as Mamaearth, Sugar Cosmetics, and Wow Skin Science as well. So how is HUL really placed in terms of capitalizing on the growing Indian beauty market? Do you think there is a risk of a loss of market share to any of these players that I mentioned?
So, I mean, if you look at from an overall category perspective, so of the beauty and personal care, the 37% of the portfolio is 37% of the portfolio is BPC, and of that 50% of the portfolio is the one which you are talking about, beauty and wellness, where the company is now focusing on actually driving the premiumization and market development. There they have actually kind of now identified 6 areas where they probably will focus more on to drive their overall growth. And yes, in the past there has been challenges faced, but the clear focus of separating the BPC between personal wash segment as well as the beauty and wellness clearly indicates the clear focus of the management to drive growth. Important point to note is that they had actually launched a premium beauty care unit some time back, and that has been tracking well. They highlighted about 100 crores of sales coming from ARR coming from that business. So if that tracks well, I think HUL, given its wide product portfolio, some of the brands that they launched were Simple, Love Beauty, and Planet. All that could be actually, if things works well, then they can be brought into the offline channel as well, and HUL can leverage their distribution reach. So from here on, I think clearly focus is more on these segments to drive growth, and hence HUL will also give a tough fight for companies who are also looking to enter into now offline channel as well.
Right. Of course, we have a new CEO, right, at the helm, and we've seen the company bifurcate the beauty and personal care into 2 segments. They also undertook price correction in soaps and skincare. Do you think that should provide a growth push, this fiscal year itself?
Yeah. So, I mean, the challenge has been for the personal wash category has been on the mass side, where the company has taken pricing actions, and that will clearly probably help into drive growth. But as it falls into the market, probably this year you will see improvement in volumes is expected from a personal wash segment as well. But value growth will remain probably muted, given the fact that they have taken price cuts. So that piece for the personal wash would still be a challenge, and we'll have to see how things play out. But the other beauty and wellness would probably should see a better growth out.
What about the home care segment? On a 2-year CAGR basis, it has delivered double-digit volume growth. Q3 was, a disappointment in terms of this segment, and in Q4 it reported mid-single-digit kind of growth here. Do you think, the kind of improvement we've seen in this segment could only build up from here, or how are you viewing this entire space or segment for HUL?
So this has been actually the best segment for HUL. If you look at over the last 5 to 6 years, they have been margin improvements, strong double-digit growth. Company has played well the premiumization story. Surf Excel as a brand has increased its strength and market leadership in the segment. The interesting part is that the overall consumption behavior is also changing with the premiumization happening. The liquid share is rising in the liquid basically a fabric wash segment, and that's broadly is the play where HUL would have a significant advantage. There have been many other players also which have entered into this segment, but our sense is that given its strong leadership position already there in the segment, and as well as the HUL plays the premiumization story pretty well. Our sense is that it should continue to benefit from here on. Last year was some aberration, largely because of the regional players doing relatively better than Unilever. I think from here on, I think things should improve as growth picks up.
Also want to talk about the foods and refreshments segment. It strengthened its value and volume market leadership in the tea segment. Coffee and ice cream segments continue to do well. How do you expect this particular end of the business to shape up over the long term?
So, in this, there is a mix of both penetration story, which is driven by the health nutrition segment as well as the emerging food segments. And you have the premiumization story, which is largely on the tea side. So broadly, if you look at this portfolio, which is about 1/4 share in the overall sales for the company, here as well, I think there is better outlook because of the penetration level. So as the penetration levels improves with a likelihood of income levels improving over the next 3 to 5 years, the outlook for this segment, and important to look at it, is that from an FMCG overall space as well, you would realize that the foods have been doing better than the non-food as a segment, and hence food players have reported a better growth numbers. HUL has a product portfolio and is looking into expanding its product portfolio in the food space. So packaged foods as well as health and nutrition space. These are some interesting space, including ice cream, although a bit small, but these are interesting space for the company to ensure a good double-digit growth in these segments, while premiumization story continues in the tea segment.
Right. Before we talk about the valuations and targets, I want to also ask you, last week the government had announced a hike in MSP for 14 Kharif crops for 24-25, right? The increase ranges anywhere between 1.5% to 12.5%. Now, could this lead to an improvement in volumes for FMCG pocket or FMCG basket as a whole? And how does HUL stand to benefit? Do you think the benefits will accrue this FY itself? And also, if the government announces any such measures to increase the disposable income, of course there could be more green shoots in terms of rural revival here as well, right?
Yeah, so if you look at from an MSP increase that the company, government has announced, from that perspective, if you look at it, last year also there was similar kind of an MSP increase. This year also a similar number. I think more than the MSP increase, while it is important, but I think the output would also play a very important role at the overall level, and hence how monsoon plays out, that becomes the more important thing to watch out for. Just the MSP hikes may not have a significant benefit if the output is not good enough for this season. That is one. So HUL probably, like I said, that the rural is about 40% of sales for HUL, and HUL has a wide product portfolio across price points. So HUL remains a better play as far as rural recovery is concerned. The other thing, like you pointed out on the valuation, and also if you look at over the last 1 year or so, there has been earnings downgrade for HUL. And in Q4, this downgrade cycle has to some extent stopped. The downgrades have been significantly lesser. So the upgrade cycle, as as it starts, once we see clear signs, visible signs of top line improvement, volume growth recovery plus revenue growth improving, these things will probably help company to improve their volume outlook from a mid to high single digit in a medium to period or so, which will actually kind of drive a valuation, because currently valuations, if I look at from a 5-year average basis, they are trading at one standard deviation below the 5-year average on a 1-year forward P basis. So from a valuation basis, it is reasonably valued. Important here would be how the upgrade cycle for earnings estimates begins.
Well, in terms of EPS estimates for, say, FY26, have you made any revisions, especially after the June 4 verdict, or would you stick to what you have outlined in your report in April?
We will actually wait for the improvement. We haven't changed our estimates post 4 June. We will look for better on the ground how things are actually happening and look for better numbers coming in. Because in companies like Hindustan Unilever, when the upgrade cycle starts, it do last for a very long time. So from that perspective, we're looking for more structural trends in recovery, which will benefit almost all of the FMCG names and HUL for sure.
Right, as you mentioned, the upgrade cycle may just about be starting. We saw, Jefferies double upgrade, I beg your pardon, the stock right after the June 4th verdict. But, overall, how would you say the stock compares with its peers in the FMCG basket? Do you think this is the best play in the defensive, space, given the fact that it is a market leader in the FMCG pack? Should one really look at this particular stock within the entire basket, to provide stability to their portfolio?
Yeah, I mean, the HUL do stands out as a proxy to an FMCG play to both rural recovery as well, and is reasonably priced at this point of time. Over a longer term period, as the rural recovery begins, HUL should tend to benefit. On a relative basis, if I look at it, HUL P's have corrected, even if you look at versus Nifty, FMCG, or even to its relative peers. There has been some PE correction, which we have seen largely to do with the lower growth rate that we saw in FY24. Going forward, as the growth outlook improves, HUL should be a preferred bet from a longer term perspective.
Right, as you said, all eyes will be on how the monsoon really progresses. Of course, for June it has been deficient, but if La Nina conditions develop later in August, I think perhaps that would bode well. But last question really. The last time really the stock gave double-digit annual returns was in 2020, right, when the stock had risen 24.5%. Since then, we saw the stock falling 1.5% in 2021. It gained 8.5% and 4% respectively in 2022 and 2023. But do you think the next 5 years, over this time period, the fundamentals are in place for the stock to return to that double-digit trajectory? I know it's something which one really can't guess, but do you think that potential is there, given rural recovery kicks in, monsoon is above normal this year, all these levers in place?
Sure, yeah. Clearly, if you look at the macros of India with respect to income level improving, premiumization play, which is HUL, is at its best. From all that perspective, clearly it looks to be that from a 5-year perspective, it could provide a better growth prospect. And in terms of stock returns, like I said, that from an overall revenue growth perspective, outlook improvement would be critical, and that as it starts to show double digit, which will require both volume growth as well as pricing. These two variables would be critical for the company to achieve a double-digit growth, and that would actually help the stock performance as well.
All right, very last question, what could be the big risk factor going forward? Because we've seen gross margins improve, EBITDA margins although have been flattish, and 23% is where it's at. Going forward, any big risk in terms of margin improvement that you're spotting? A
risk in the sense, from an improvement perspective, there has been kind of Right now, in the near to medium term, our belief is that the focus would be on top line growth, and hence margin improvement will be a bit more long term. As the premiumization story continues to do well, with volume growth coming, likely to come if a rural recovery remains structural in nature, that would aid into margin improvement as well over a longer term. From a risk perspective, I think there could be a near-term risk with respect to some input price increasing and all. I don't think so. Margins will deteriorate from here on. There is a more chances of improvement from here on over the next 3 to 5 year perspective, rather than it coming down.
All right, that's the view then. Expect margin improvement, and of course, with a 3 to 5 year perspective, HUL is poised for good growth. But with that, Amit, thanks a lot for taking out time and joining in and sharing your perspective with us on the show. Look forward to having more conversations with you in future.
Great. Thanks, Nandita. It was
Thank
great.
you. Well, that's the word then. HUL, a good bet for the long term. Of course, just a disclaimer, we are not recommending any stocks here. We are just highlighting the positives of, having a stock like HUL in your portfolio. But with that, we're timed out on this edition of Stocks for the Next Innings. Stay tuned to Money Control for all your other news and updates, and have a great day.